Hello, I've returned with another ADH Wealth solution. Today, we will begin to discuss fulfilling all of your financial needs. As always, this is a basic description. For an evaluation of your own, please schedule an appointment. My information is in the description. Lastly, make sure you hit the like, drop a comment, and if you're new, subscribe and hit the notification bell so you're made aware every time I release new content.
Yo, it's your boy, the insurance junkie, your fiduciary fella, the all-star advisor, Alonzo Hall, and I've returned today to weapon tap on your head with another ADH Wealth Solution article, more or less a cash commandment commanding you to get life insurance in your 20s. And the article here is labeled, Do You Need Life Insurance in Your 20s? Before we go in, ladies and gentlemen, make sure you hit that like, drop a comment, subscribe, and hit that notification bell so you're made aware every time I release new content. And as always, share. Lastly, you can contribute to channel growth by donating. You can schedule a one-on-one appointment with a licensed financial professional, and you can purchase life insurance directly up to $1 million with an instant decision and no medical exam. The links are in the description. So as we proceed to give you what you need, when you're in your 20s, especially your early 20s, life insurance is probably the last thing on your mind. You might be preoccupied with getting your career off the ground, meeting your basic expenses, and figuring out how to handle all the other responsibilities of being an adult. You might also be single with no spouse or kids who depend on your income. So why would you want to buy life insurance? In fact, there are some compelling arguments for buying life insurance well before you think you might need it. Life insurance, for starters, costs substantially less when you're younger, and you may develop health issues as you get older. One of the most overlooked benefits of purchasing insurance at a young age is the ability to lock in your future insurability, said Matthew Carberry, a certified financial financial planner professional with Ridgeline Financial Partners, Cabray Staunton Financial Partners in Avon, Connecticut, in an interview. If your health declines as you age, if you develop a chronic condition such as high blood pressure, high cholesterol, or type 2 diabetes that isn't well managed by medication, diet, and lifestyle changes, if you develop coronary artery disease, if you get diagnosed with a high-risk cancer, or if your weight creeps up over the years and pushes your body mass index into the obese category, you might become uninsurable or have to pay a substantially higher rate. If that happens, you still have the option to purchase some types of life insurance designed for those later in life. You can lock in coverage and premium rates for the life of the policy. Policy benefits may be limited for the first 2 years, but in some instances, your medical history doesn't matter, and you may not have to complete a medical exam. But you won't be able to buy nearly as much life insurance with these kinds of policies. They're meant only to cover your final expenses, not to help replace your income and provide ongoing support for your family. Most of those policies are a max of $25,000. In addition, some providers have an age floor on these policies, meaning you might not be able to buy one until you're at least 50 years old. Going without life insurance for decades is a risky move. Term versus permanent life insurance. There are two basic categories of life insurance. Term life insurance provides a death benefit for a specified period of time. Permanent life insurance also offers a death benefit and sometimes other features, but without the time restriction, and it tends to cost more. So, many people with tight budgets tend to lead towards term life insurance coverage. But many term life insurance policies offer convertibility, meaning the full policy or a fraction thereof can later be converted to permanent life insurance, Carberry said. In other words, getting an inexpensive term policy while you're young and healthy keeps your options open to switch to a different type of life insurance that may be appropriate when you're older. Carberry said he thinks it's a very good idea to purchase life insurance in your early 20s to lock in your insurability. You can protect your current and future liabilities for a negligible cost with term life insurance, he said. If you wait until your 30s, your premiums will be higher because you're older and you risk being less insurable. In addition, most of his clients get more proactive about seeing a medical professional as they age and start a family, he said, and medical issues can be identified then that can result in adverse underwriting. Someone in their late 20s who starts a family young needs life insurance to protect against the cost of caring for young children, inflation-adjusted future college expenses for the kids, and paying off liabilities such as a mortgage and student loans, Carberry said. While federal student loans are discharged when you die, private student loans may not be, depending on the provider. Your estate or your co-signer, if you have one, may be responsible for paying them. Review your loan terms to see what happens to the debt if you die before you've repaid it in full. Even single people with no dependents should have some life insurance, said Rebecca Schreiber, a certified financial planner and co-founder of Pure Financial Education, a financial planning firm serving early career professionals in Washington, D.C. Someone is going to have to take off work, get your stuff, and arrange a proper send-off. If you have life insurance, she said, your loved ones have time to make arrangements and time to focus on grieving and healing. The more money you leave them from your life insurance policy, the more time they can take off before returning to the stresses of their everyday lives. Make sure the person that you designate as your beneficiary knows that you have designated them and has the name and contact information for the company that issued your policy. According to the Insurance Information Institute, an organization whose goal it is to improve the public's understanding of insurance, life insurance benefits often go unclaimed for several reasons. The insurer might not know that the policy owner has died, or the contact information you provided about your beneficiary when you took out the policy might have changed, making it difficult for the insurance company to locate them, even if it is aware of your death. If affordability is an issue, you might find a small life insurance policy offered as a perk of holding a certain credit card or belonging to a certain credit union, Schreiber said. You might also have a life insurance benefit through work or through fraternal organizations. Like I know a lot of frats who an established life insurance policy can also provide planning options for retirement. Sure, that might seem like a long way away, but when the time comes, steps taken early in life often provide income options that make that transition easier. For instance, the cash value in a whole life insurance policy can give you retirement planning options in conjunction with existing savings accounts and plans like individual retirement accounts and 401k plans. Retirement savings plans are often tied to market-based investments. When markets are not performing well, investors may be able to borrow tax-free from their whole life insurance cash value to supplement their retirement income, allowing them to preserve the principal in their retirement accounts to take advantage of any market bounce back in the offing. But there are implications to borrowing from the cash value of a whole life insurance policy. Such actions will reduce the policy's cash value and the death benefit. This could also increase the chance that the policy will lapse, and it may result in a tax liability if the policy terminates before the death of the insured. The wisdom of using the cash value available in a whole life insurance policy for income in retirement will vary depending on individual circumstances. Many people seek out a licensed financial professional for advice before planning such a move. Ladies and gentlemen, that's the article for today. Make sure you hit that like, drop a comment, subscribe, and hit that notification bell so you're made aware every time I release new content. And as always, share, share, share. Lastly, you can contribute to channel growth by donating. You can schedule a one-on-one appointment with a licensed financial professional, or you can purchase life insurance directly up to $1 million with an instant decision and no medical exam. The links are in the description. With that being said, ladies and gentlemen, wipe ass. Work in progress every day and see success. Wipe ass. Work in progress every day and see success. Wipe ass. Work in progress every day and see success. And remember, when people challenge you, they don't challenge you to challenge you, but they challenge you to challenge you. Accept the challenge. Salute.
Interested in having an evaluation? Find my contact info in the description and schedule a consult to explore your options. Have a financial question but don't know who to ask? Email me at a.hall@cgwealth.financial and your question may be answered in my next video. Security products are subject to investment risks, including possible loss of principal. Before investing, carefully consider the investment objectives, risks, limitations, charges, and expenses of the product and any underlying investment options. This information can be found in the product and investment option prospectuses. Copies are available from your registered representative.